Welcome back, my dear students. In the previous lecture, I have discussed about the basic formation and characteristics of double bottom on a price action chart. From this lecture on, we will learn another strong chart pattern, that is a head and shoulder pattern. So in this lecture today, I am going to explain the basic formation and characteristics head and shoulder chart pattern on a price action chart. So the head and shoulder chart pattern is a popular and easy to spot pattern in the technical analysis. So let's start. It also indicating a reversal in a trend where the market makes a shift from bullish to bearish or vice versa. This pattern is considered to be one of the more reliable patterns that predict a trend reversal. Head and shoulder pattern is a common chart pattern in the technical analysis. It is formed when the price of an asset creates the three peaks, with the middle peak is being the highest and the two outside peaks being roughly equal in the height. Normally, two outside swings are called left shoulder and right shoulder, and the middle one is called as the head. Price moves up to from a higher low. Now left shoulder has formed. At this point, price has rejected and price fall down to hit the support level because of the seller pressure come to at the high, and then price goes up to makes a higher high while buyer return to the market and push price to new high which from the head. At the same way, the new high is not sustained as the price fall back down due to the seller pushing price down to create continuing neckline. In this region, market price again fall down for testing the previous support. Here, buyer again enter pushing the price up to a high, but this high does not exceed the previous high. This high is the right shoulder. Seller get in again and push the price down for retesting the previous support level and makes the neckline. So chances is high that price break the support level. Now that we have a defined head and two shoulders, we can draw neckline support. This level will become a key component when we get into how to trade in the breakout. Then we have sure that pattern is confirmed. As you can see the real chart example, you will notice that here market price move up and to from a higher low. Now left shoulder has formed, and then price has rejected and fall down to hit the support level because selling pressure is high. Price again goes up to make a higher high while buyer return to the market and push to the price new high, which is from head. At the same way, the new high is not sustained as price fall back down due to the seller pushing price down to creating continuing neckline. In this region, market price again fall down for retesting the previous support. Buyer again come to the market and pushing the price high, but this price cannot exceed the previous high. Here we found right shoulder. Seller get in again and push the price down for retesting previous support level and makes the neckline. At this moment, chances is high that price can break the neckline. While price break the neckline, then pattern is confirmed. You can trigger a short trade entry and get some sweet profit. On the other hand, when market goes to downtrend, then show the opposite scenario. This is the odd USD 1 hour chart. This signal is bullish trend reversal. An inverted head and shoulder pattern occurs when the price of a security drops, marking the bearish trend and reach the lowest level. Then the bullish trend kick back in and push price upwards. However, this upward price trend does not last long, and the bearish trend return pushing price to ever lower level than before. Price rises up again but not last long, and the bearish trend push the price downward again. This time the price fails to reach the previous low. The chart formation of the inverted head and shoulder pattern is one of the most reliable to predict the reversal in the market trend from bearish to bullish. The target is measured vertically from the lowest thought to the neckline. Once price break the neckline, just wait for price to rally back up to touch the neckline, which is breakout. When you confirm price break the resistance level, then you can trigger a long trade entry and get some sweet profit. So not more today. Have a nice day. Goodbye.